If we do get an agreement from the US government, are we in for a year of stops, starts and worries?
Oh yeah, simply because the size of the debt. I mean, this is an experiment that's been going on in the US now, what, for 100 years or so, this idea of, funding the deficit, by borrowing, and the size of the borrowing now is huge. It's absolutely enormous. I think 16.5 trillion, I think, is the number at the moment. And it looks like it's going to be bigger by the end of the year, so that's quite alarming. But really, when you look at the cost of borrowing in the US, which when you add up all the household debt, the corporate debt, and all the unfunded liabilities, Medicare, Medicaid, pension plans, all this sort of thing, and you add it up, you get this astonishing number. I mean, it's galactic in its proportions. And I really don't see how they can ultimately fix it immediately.
How is that going to translate into investment and Asian assets this year? We're seeing the markets rally. Hang Seng is up over 1.5% at the start of the day.
Well, I think the Hang Seng went up 22%, but it's not a number you can really look at. You need to look at the performance over a period of time. So, for example, if you look at the portfolios that we manage for clients at Palladium, our portfolios are actually outperforming the Hang Seng index, by a long way. And this is by using traditional financial planning tools such as modeling and putting together a combination of bonds and equities, which over time actually produce better results and also dampen volatility. So translating that into the stock market, if you want to look at individual assets within the stock market, there are very good stocks to be had if you know where to look. But what we would recommend investors do is look at total return rather than just the stock price.
Is the year 2013 good for Asia? Is there going to be more money flowing in because of the situation in Europe and in the US?
Well, if you look at the China market, for example, the A market, I mean, it's sitting on the bottom at the moment. It's PE ratios of 11.7. I think the all-time low was 11.3. So this is like really, really attractive stock, valuations at the moment. Also, the liquidity in China at the moment is huge. There's so much money slushing around. And they've cooled down the property market. The Chinese economy, for example, they actually engineered the slowdown. It just happened. It was actually engineered. So people are going to be looking for places to put their money. They've increased the QFII program, and they've also allowed pension funds in China to put up to 20% of the money into stocks. It's got to go somewhere. So the stock market in China goes through periodic cycles. We've had 4 in 20 years. The last time was in 2007, where it hit 6,430. I mean, ask yourself, it's got to happen sometime.